Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. In the name of Allah, the most merciful and the most merciful. Dear sisters and brothers, today I would like to share with you um, the new concept of the framework of regulation in Indonesia and related with the risk management regulations as well. You see here in Indonesia, the framework of regulations are mainly conducted by Central Bank of Indonesia. Yeah. So here, the Bank Indonesia as central banks is independent authority that conduct the rule and uh, its authority concerning with the monetary activities. The main task of the central bank is how to determine and conduct the monetary policy, and it tries also to regulate and maintain the payment system. And that one, I think, is not updated. The regulation for the banking supervision has been moved to the OJK, or Financial Services Authority, and now the central bank, the task is added as the macro prudential authorities. Yeah. And the next one, in terms of the monetary policies, the central bank here conducting some monetary activities such as conducting the open market operations in order to influence the liquidity in the money markets. So liquidity here refers to the condition whereby the availability of the cash, yeah, in the economy is maintained. Yeah. And the second one is the regulation on the stationary reserve requirements. Yeah, whether contractionary or expansionary. So it depends on the stance of the monetary policy. So, stationary reserve requirement is the compulsory reserve that must be put by the commercial banks into the central banks. And the next one is the lender of last resort. Yeah, in order to assist the short fund liquidity for the commercial banks. Yeah. So in case commercial bank highly need a fast fund in order to fulfill the liquidity in the banking operations. So they ask the central bank as the lender of last resort. And in fact, this money given by central bank uh, in order to mitigate and anticipate or prevent the systemic risk that has potentially create monetary instability or financial instability. The next one is that the policy related to exchange rate, namely maintain the value of the exchange rate. The value here refers to uh, the the ability of the rupiah in order to be exchanged to the other currencies, particularly the hard currencies. And next one is the ability to manage the reserve here in order to facilitate international trade. The next one, sisters, here is that related with the maintaining the payment system operations. So if you, I think you quite familiar with transfer payment among banks or between banks, and here we have three kind of transfer activities or mechanism. The first is the national clearing systems, and the second one is real-time cross-border settlement (RTGS) and intensity clearing. So I think those three things are related with the transfer mechanism from one bank to another bank, and also in terms of geographical positions. So if you are located in the region or within Indonesia regions, I think you can use the national clearing systems as well as real-time gross settlements. But if you are located maybe across country or cross nations, maybe you can use intercity clearing. Yeah. And the next one here, I think I will not discuss this one because this the bank supervisions and regulation has been moved to the OJK, yeah, of Financial Services Authority Agencies, or OJK, yeah. So we move to the next one here, yeah, that the approach that used by the central banks in order to regulate the economic stability or financial stability is the flexibility of policy. So I think you did remember, if you when you learn about market economics, you learn about the term stance, and also you learn about discretions, yeah. So stance and discretions basically is the flexibility that owned by the central bank in order to execute the monetary policy in order to maintain the stability. And the second one is the prudential regulations. Yeah, prudential here in this context has been converted into macro prudential policy. So prudential here by referring to the macro level. So by looking at the micro environments, so based on this macro environment, the central bank will try to accommodate in order to ensure that uh, the the macro environment here is well maintained so that not transmitted into vulnerability in the banking sectors. And here is the monitoring or surveillance on the banks. Yeah, I think has been moved to the OJK in details. This is this. Yeah, and the next one is the regulation framework here. Yeah, the framework here started with the banking regulations because the main institutions in financial system is the banks, and the bank here is the most complicated and highly regulated institutions, so that the bank is put as the biggest concern in order to be regulated by the governments. And some regulations, some laws has been released so far related to the banking sectors. Yeah, and here is the bank's function is financial intermediary. I think you have understood before that the bank is connecting between deficit unit and the surplus unit. Yeah, or the funding and lending. So the bank here is intermediary institutions. Yeah, and the next one. Here from the Bank Indonesia perspective, as I mentioned before, that supervision of the bank has been moved to the OGK. So all these things related with the right to license, right to regulate, control, impose sanction, and so forth here has been under the OJK, yeah, not the Bank Indonesia. So the banking policy here referring to the architectures of the national banks. So national architectures of national bank here provides comprehensive and direction on how to move the bank forward, yeah, and how to ensure that the bank has ability to resilience, yeah, a sound and also stable in the long run, so that it can promote economic in economy. And here the government regulation here related with the how to ensure the bank here is operationally sound. Yeah, the bank is able to absorb the shocks. Yeah, and in the same time, bank can facilitate the financial activities in the economy. In other words, the banking policy must be connected to this resilience resilient policy. So resilient issue has been the main issue here because the government tries to ensure the shocks coming from external can be absorbed by the banks and in the same time bank can remain maintaining the functions as financial intermediary. Yeah. And we try to learn about the risk management regulation here. Yeah. So if you try to look at the for surveillance based on the risk, we start from the first here is understanding of the banking operations. So if you are in the future act as the bankers or regulators, you have to understand the main operation or activities of banking. And the second one, you have to understand how to assess the potential risk of the banks, and you have to set up also the plan mitigate the potential risks. Uh, and the fourth one is that you have to focus on the how to examine, yeah, the risk, so that the risk here can be maintained. Yeah. And the fifth one, the strategy now, how to make this the risk is under control. And the last one here is the you have to surveillance the banks activities intensively. So all in all, the supervision risk bank supervision basically put the risk into the center of the banking operations and try to mitigate and anticipate the risk as far as before, and try to surveillance the risk that embedded in the banking by some technical analysis. Yeah. And the next one, if you try to learn about banking risk here, I think you have learned before that the risk is the potential move, yeah, from the normal activities that can give the loss, yeah, if it's not anticipated before by the banking sectors. And the impact of this risk could be in the form of the internal or external and also global here if the bank has a big sizes. And here I think you have learned before about the type of risk, but majority of the risk that embedded in the bank is credit risk, liquidity risk, and operational risk. These three things are the main risks embedded in the banking sectors. And here is by looking at that risk, therefore the risk management here must invite the intervention from the direction of the directors of the management of the bank, so that the policy of risk management is included in every strategy and activities that the bank is taken care of. Yeah. And the next one is the we have committee of the risk management and risk management unit. So the committee here usually under the director of the banks. In that this committee tries to focus on risk mitigation and risk anticipations. Yeah, and for sure, in terms of the risk management, they have requirements. Yeah, independent must be a has capabilities in on the risk management. Yeah, and also here must has ability to report to the central banks or OGK on this regard. Yeah, so that um, the banking risk is well monitored by the authority. I think that's all, dear sisters and brothers. So all in all, the framework of the regulation in Indonesia is taken by Central Bank of Indonesia and Financial Services Authority, whereby these two authorities take a very high concern on the risk mitigation concepts by taking the risk management as the part and parcel of the surveillance mechanisms, so that the financial stability is well maintained. I think that's all for a while from my presentations. Thank you very much. Wassalamualaikum warahmatullahi wabarakatuh.